All right, we're just getting started. Where to even start this day? So many thoughts are going through my head right now. But mostly my thought about the show, of course, is did we just witness a major, substantial, huge day on the inflation front? Did inflation already peak? Is the market action today telling us that not only has inflation peaked, but the recession story that we've been talking about here, that I've been saying all along, that we already are in a recession? Um, Sounds like this is becoming more widely accepted. GDP Now, a real time economic statistic tracker, is indicating that much. Um, Now we're debating, though, what kind of recession are we going to have? Is it a shallow recession, mild, deep, technical? A recession's a recession. Okay. Let's just get that straight. But the point is, oil has plunged today. And I think it caught people off guard. Not us. I've been talking to you about this. Take profits on some oil stock holdings, things like that, because it's just gone up so much. It would just be prudent to take some off the table. It wasn't a recommendation to sell oil stocks. It was a recommendation to say that if oil stocks have become such a big part of your portfolio and you binged on oil related investments, and they've gone up a lot, good for you. Doesn't do you any good if you don't take something off the table once in a while. I'm not saying you should be a trader, but be prudent. Take something off the table because we've seen the oil market go from tight to glut and back so many times. And this is probably just another one of those times. There's an old expression: the cure for high oil prices is high oil prices, and the cure for low oil prices is low oil prices. Why? Because markets adjust, drillers shut down production, then they restart production and look for more production. Consumers, businesses, they change their energy needs, right? They start to become more efficient when oil is high. When oil stays low for a long time, they aren't as efficient. There's so much going on here. So let's get into it. My name is Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. If you have any questions, please ask me in the comments. That's the best part about this. When you ask me your questions in the comments, words of wisdom, words of encouragement in the comments are also always appreciated. And do me a favor, this show is only sponsored by me. That's it. It's all me. So if you would please help me out, give it a thumbs up, a heart, an applause, a wow, whatever reaction is available to you, depending on which social media platform you're watching on. I'd really appreciate that. Don't be shy. I'm going to roll the introduction. We've got a couple of important things to talk about, like, did inflation finally break? I feel like I had a fever and it broke. That's what it feels like. Here we go. All right, we are back. Thank you so much. Just so you know, we are on these available social media platforms. So hit me up on whichever one you enjoy the most. The only one I don't stream live to is Instagram, but I do post all the show highlights there as well as all of the others. And thank you very much. Wendy, I see you. Thank you very much for joining me. I really appreciate that. Kelly is out there. Great insight, Mitchell Goldberg. Thank you very much. Really appreciate that. When someone I think is so insightful says that I have a great insight, I'm feeling pretty good. So thank you very, very much. Let's talk about inflation. Something happened. Oil plunged. Oil was down a lot today, about 10% in a day. That is a massive move. I wonder if we're going to see the price of gasoline at the pump drop 10% tomorrow. I wouldn't hold your breath for that, but you've already seen the national average go above 5 and then go below 5. I think it's down like 480, and we could quickly see it down to like 4.25, 4.5. It would be something else if we saw it go down to like a 3 handle. Okay. But here we are, oil coming down. And Jay says, dead right on oil. Thank you very much. I was worried that I was going down a slippery slope for a second there. I don't have my bada bing, bada bump noise, but yeah, get it? Slippery slope. Thank you very much. So let's just take a look at some of the big headlines. Let me get rid of the social media icons. We're going to go to screen number 4. Pop myself up in the corner. Here we are. Oil tumbles as much as 10%, breaks below $100 a barrel as recession fears mount. As recession fears mount, this has been a recurring topic here on Be the Boss of Your Money. This is a show about personal finance, investing, all of those things. If it has to do with money, we want to talk about it. Oil down. Hopefully, I haven't locked in my heating oil contract yet for next year. Maybe I should do that pretty soon. But you're going to start to see gasoline come down, and you're going to start to feel like maybe the back of inflation has been broken. Now, interest rates have been going up. We've had a lot of work done, a lot of damage done to the economy by the Federal Reserve. And they're trying to do the damage, by the way. They're raising rates to slow the economy. It's kind of like when you work out. You break down muscle fibers when you work out, but in a controlled, safe way with good form. And then, you rest for like a day, and then your muscle fibers grow back more and more plentiful. And that's what weightlifting is, and strength building, right? I'm really working hard on these analogies. Thank you very much. So oil plunges, and I think it's just so significant because it might mean that oil has finally broken. Okay. Jay, you didn't like my joke, man? I can't believe it. And Russell Cohn, it is very unusual for oil to drop at the beginning of summer, but with these historic prices, we will take any discount to oil. Thank you very much, Russell. That is right, my man. So what happened? Recession fears. This is what we've been talking about. If recession fears come along, okay, oil prices tumbled Tuesday with the benchmark falling below $100 on as recession fears grow, sparking fears that an economic slowdown will cut demand for petroleum products. Now, we were just talking about that, but we were also, pundits were talking about China coming back online, reopening the economy. They had all kinds of shutdowns because of COVID, of their very strict COVID policy. So China would start using more oil. But if the whole world is going into a recession, it's tough in Europe, it's tough in the United States, it's tough in Asia, it's tough everywhere, then demand for oil goes down. And if demand for oil goes down, and just about everything we buy, touch, is petroleum based. So that is a huge thing. But I want to show you something else. And don't go away. This is good. You haven't, no one's taken a look at this for you, okay? But I'm going to take a look at it, okay? This is the price of copper. So what oil is to energy markets, it is the energy market, obviously. Well, there's natural gas also. But copper is the metals market. I mean, you have gold and silver, but copper, the red metal, is the most important metal there is. And how's that doing this year? Okay. Copper. Let's go to year-to-date chart. Look what copper has done. This is year-to-date. Look how much it's gone down. All right. Copper is plunged. So if there's inflation, why is copper down 22% on the year and down just about 20% in the last 12 months? I mean, that's not inflationary. Oil is coming down. Copper is way the F down. I didn't say the F word. I just way the F. Okay, Rita and Debbie, who are going to look at this show and monitor me tomorrow. Okay. Wheat. Look at wheat down 5% today. This is wheat year to date. This is right over here. You see the spike up? Okay, this is the spike over here around the end of February. That is right when Russia invaded Ukraine, which is the breadbasket of Europe and considered a breadbasket for the whole world. Ukraine is a massive exporter of wheat. So wheat spiked up, stayed up, and now it's coming down because all of a sudden the world realizes we are pretty amply supplied with wheat. And now it's coming down. Okay, so if you look at again oil, if you look at if you look at okay, if you look at copper and you look at wheat coming down, wheat, okay, and you look at oil coming down today, you have yourself the ingredients of a broken inflation trend. Inflation's coming down. Now, listen, I know anything can happen. We're not clairvoyant. We don't have a crystal ball. Well, actually, I do have a crystal ball, but it's just for show. It doesn't really work. Yeah, that's right. I have one, but it maybe it's made out of glass. I don't know. It looks cool on a shelf, but really, what you need to think in terms of prices of commodities. Lumber has come down. Remember, there were memes last year all over the place. Take me someplace expensive, and they show a couple dressed all fancy and everything, having a nice meal with a bottle of wine, and they were like at the lumber section of Home Depot, someplace expensive. Not anymore. Okay. So, hey, Rita, right back at you. Thank you for the heart. By the way, if you see my screen flash, next week on Tuesday, I'm having the Optimum, the cable vision, local cable company come in, and they're upping my speed from 200 megabits per second to a gigabyte per second. And that should clear up the jam. That's why I keep getting these flashes on the screen. So hopefully that'll work. Wish me luck. If that doesn't work, then I'm going to buy all new equipment, which don't tempt me. But, I love buying my audio and video equipment stuff. Okay, so let's take it back to another screen. Okay, so the Dow was down 129 points. It was down about 700 earlier today. So overall, a pretty light day. NASDAQ, which was down over 2%, was up about 2% of the day. S&P, which was down over 2%, was up on the day. Gold continues to go down. So if gold is going down, copper is going down, wheat's going down, oil's going down, where's the inflation? This is like, to me, this is such a significant day with what happened to the price of oil. We could be in a position where there's just too much oil sloshing around. We're going to look at oil stocks in a second, by the way. The 10-year Treasury down to 2.81%. The VIX was basically flat, 27. We talked about the VIX last week, but the VIX has been pretty tame considering how much the market is down. All right, let's take a look at the yield curve, and this is significant, very significant. Alert, significant, significant. The 2-year, 2.82. You see that? And the 10-year, 2.81. See that? The 2-year yield, this one over here, is higher than this one. That means the yield curve is inverted when short-term rates are higher than long-term rates. Usually, the further out you go, 10-year yields would be higher than, let's say, a short-term yield, right? Let's say like a 5-year CD would be higher than a 3-month CD. You'd expect the longer you got, the higher the yield. But sometimes this flips in the Treasury market, and it's called an inverted yield curve, and it signals a recession. It signals that a recession is on the way. The ability or the predictive prowess of an inverted yield curve is undisputed. It predicts a recession. Again, we've been talking about recession that we're already in one. Whether you want to call it technical, mild, shallow, whatever you want to call it, it has begun. It feels pretty bad. The only thing that you haven't seen fall apart yet is labor. Okay, because the unemployment rate is still really low, and we haven't seen job loss go up a lot. Well, we have on Friday, today's Tuesday, on Friday, we have the jobless figures. The non-farm payroll figures are coming out on Friday for the the month of June. And we're going to get a glimpse to see if the labor market was hurt or not. If it was hurt, well, I almost said look out below, but if it was actually hurt, then you know what that means? It means the Federal Reserve could lay off maybe, they'll have a few more interest rate hikes, but maybe slow it down after that. And all of a sudden, it's a market for up stocks. Okay, it becomes a very favorable environment. We're going to keep going. I want to show you this. This is the S&P today. This is the S&P 500. I don't know if you can see this on your screen, but there's a line over here. All right, right. You see the yellow? That's where it started. It plunged early in the day down about over 2%, and then slowly but surely around noonish, 11 a.m. noon, it started to go up until it went into positive territory. That's pretty good. Okay. So just the kind of day we had. Let's take a look at oil stocks. Oxy down 2%. Let's go from worst to best. Murphy Oil down 8%. Conoco down almost 7%. That was just 124. Now it's 84. So you get $12 stock going to 8. Hess down. You see all these lines over here on the right that I'm pointing at? The green, the left is the low, the right is the high, and the red part measures how far down the stock is from its high, or measures how high it is from its low. But you see the red has gotten so big here. Like a few weeks ago, there was no red. All these little arrows were only to the right. But look at Chevron, 180s to the 140s. That is a shellacking. And we talked about that and why it was prudent to take gains if you had them. Oh boy. But on the flip side of that, since interest rates are down today, I want to tell you about some of the tech stocks. So the tech stocks that we talk about, like Zoom, DoorDash, DocuSign, but tech in general, the Nasdaq was up. The Nasdaq was up almost 2% today. So when interest rates started to go down and inflation started to break, the highest PE ratio stocks, which means they're sensitive to expectations, economic expectations, those went up the most. So tech stocks were by far the winners of the day. Interest rates go up, it makes their future. I'm sorry, if interest rates go down, it makes the future earnings of tech stocks look more valuable when discounted from the future into today's dollars. So that's why you had such a really big day in the Nasdaq. Hey, what say you, Randall? Russell Cohen. Pricing in restaurants and supermarkets will never come down, even though raw commodities have come down in price. I see what you mean. Like, yeah, they're supermarkets, gas stations, they're never in a rush to lower prices because if the cost of goods sold goes down for them, and they can maintain high prices on us, the consumer, that's big. That's more profit margin. I get that. That's great. But eventually consumers do start to shop around. They do start to gravitate toward the competition. And then companies like Walmart will lower prices. Target will follow. Costco will follow. And then prices go down. And then it's a rush a race really to see who can lower prices the most. So it's all cyclical. So I do think they come down. But, if you're feeling like prices go up a lot quicker than they come down, I would have to agree with you for sure, Russell. So that's the story today, guys. It's all about inflation. The Fed raised rates, slowed the economy. But what really slowed the economy down and is bringing inflation down, at least appears to be bringing inflation down, is not the Fed. It's high prices. Because the cure, not just for high oil prices, is high prices. The cure for high prices is high prices, because then competition comes in, cheaper competition, and consumers and businesses alike start shopping cheaper, bringing everybody else in line. Last comment. Thanks, Mitchell. You are so very welcome, Wendy. I really appreciate your friendship. Thank you very much. All right, so I'm going to get going. And Garrett is out there also. Garrett, good to see you. All right, guys, have a great rest of your evening, and I'll see you tomorrow. Bye.